worldwide, more ethically conscious investors are looking into profitable stocks that have sustainable agendas to combat climate change. SciPark Resources Berhad is a company specializing in environmental technology and engineering. Landfill remediation, where rubbish sites are transformed into land with economic potential through synergy, is its world-renowned specialization. Furthermore, they have an increasingly growing revenue stream from renewable energy, and that is set to define its future financial statements. Furthermore, its relatively low beta makes it comparable to other utilities, and is often compared as such by analysts. They also have some biomass projects through waste-to-energy schemes, which will play a critical role in its 2017 performance. They are at the forefront of sustainable and green energy generation, and as a result have won numerous prestigious awards, including from Asian Power, Finance Magazine, and Ernst & Young. A combination of strong fundamentals, promising technicals, and shifting economic trends makes SciPark our recommended stock for 2017.
Now, allow me to go over the fundamental analysis which so strongly backs up the worth of this company. Let's examine several aspects and take a closer look at some of the business performance ratios. So the chairman is Tan Sri Razali Ismail, previously acted as Malaysia's permanent representative to the United Nations. There, he notably was on the Commission on Sustainable Development and was the president of the General Assembly developing positions on development and sustainability. He, along with other board directors, have as a result been able to foster a very strong relationship with government agencies who act as their customers. And now we go on to the ratios, and we first start off with the profit margin and operating margin. These will give us a first insight on the profitability, the outlook of the market, and the structuring of the company. The profit margin was 64% in 2015 and 20% in 2014. The operating margin was 84% in 2015 and 78% in 2014. Then, of course, there's the EPS, another yardstick of profitability. SciPark performs well with a value of 0.2. Of course, the value has to be interpreted with caution, and we checked its quality by calculating the cash flow per share, which was much higher than the EPS. The price to earnings is 11.1, which shows that the company is considered undervalued. And the dividend payout ratio of SciPark is 24.5%, indicating that it is in its more mature stages where it's parting with a significant amount of dividends. SciPark also has a good asset turnover of 0.3, showing efficiency in deploying assets to gain revenue. And SciPark also stands up to the asset test with a value of 5, showing that it is capable of paying off its short-term liabilities. There is also the cash return on assets with a value of 5.1%. It is an efficiency ratio that rates actual cash flows to company assets without being affected by income recognition or income measurements. There is also the return on equity, which reveals that the profits earned with shareholders' investments, and that value is 12.2%. Here are also some of the comparisons with its competitors in the utility market.
There is a huge first mover advantage present in that it is currently the only major local company to be involved in this line of work. SciPark's revenue comes mainly from environmental and landscape infrastructure, where they are one of the key players in the industry. However, their rapidly changing portfolio to energy means that it will soon define the company's performance. Utility stocks are favored by investors for their stable earnings and are highly sought when corporate earnings in other sectors suffer. Currently, many major sectors are facing challenges and their near-term prospects look dimmer. Telecommunication companies are facing irrational competition among themselves. Banks' interest margins have narrowed and there are concerns about their loan quality and loan growth. And oil and gas players are bracing themselves for a prolonged period of low oil prices. SciPark is one of the largest solar power producers and as a result has a high market share in this area. Furthermore, the percentage forecasted return on equity is equivalent to these utilities, and the multiples such as price to earnings and enterprise value over EBITDA are consistent with the industry. Beta is also comparable at 0.89. Technical analysis looks at the price movement of a security and uses this data to predict its future price movements. This has revealed that SciPark is currently a buy stock and has been rated as such by most analysts following the company. So a level of resistance is a line which connects a series of highs. As a result, a break in this region is key to showing when a trend is reversing. SciPark broke its resistance as recently as a few months ago. An inverse head and shoulders, often referred to as a head and shoulders bottom, is a chart pattern predicting the reversal of a current downtrend. Thus, SciPark stock experienced this pattern in 2016 and is consequently expected to enter into a new phase of stock growth.
There is currently a green wave in Malaysia, and SciPark is catching it at just the right time. Malaysia aims to be a green technology hub by 2030, when the industry is expected to contribute $13 billion to the national GDP. There's an urgent need for landfill restoration, where Malaysia produces an average of 30,000 tons of waste a day and only 5% of it is recycled. Over 10 years, the generation of municipal solid waste has increased more than 91%, with 56% of it going to landfills. The Solid Waste and Public Cleaning Management Act, passed in 2007, is phasing out non-sanitary ones, and these accentuate the role SciPark is playing. In terms of renewable energy, Malaysia, primarily through the Sustainable Energy Development Authority, has taken steps to further clean energy deployment by mandating adoption of a renewable energy feed-in tariff under the 2011 Renewable Energy Act. While this would also serve to expand the market and increase competition, it is a huge plus for a company specializing in this area. There's been a rapidly increasing interest in solar power, with higher feed-in rates and more access to financing. There's lower risk as well, from an investor's point of view, as the construction time is shorter. Large-scale solar projects is a new project, whereby plants are to be spread out across the peninsula and Sabah. SciPark is also actively involved in biomass and biogas, and these are fast-developing areas with various programs being implemented, including the field diversification policy, the EMEER, etc. SciPark has significant leverage in the waste-to-energy sphere and is actively bidding for several big projects, including the development of a photovoltaic plant, which is expected to add to its income this year. This is in tandem with the government trend with fiscal incentives like the Small Renewable Energy Program, which allows selling of electricity to TNB.
And now, we move on to the valuation using the discounted cash flow analysis. First, we project the sales revenue of the company, and there are two ways to do this, an optimistic one and a more realistic one, where it's 5% for the first 2 years and 4% for the 3 years after. And then we have to work out the operating costs of the company, and we assume it'll stay roughly constant at a rate of 75% for all 5 years. After that, we have taxes, which we assume to stay constant at a rate of 2.5%. And then we have the net investment costs of 16% every year. Then there's the change in working capital, which is calculated to be 4.2% every year. And finally, we can calculate the free cash flow of the company. And there we have it, the free cash flow for all of the projected years. Then we calculate the cost of equity, the cost of debt, which turns out to be 7.6% and 3.5% respectively. And using the weighted average cost of capital model, we calculate the discount rate to be 5.3%. Using this, we can then get a terminal value of 1.7 billion. Using this information, we can calculate the enterprise value, which turns out to be 1.4 billion. And finally, a fair value of 1.2 billion. Using this value, the stock valuation would be around 10 ringgit Malaysia, almost a 5-fold increase from its current share price. As for expected returns, the waste-to-energy plants in 2017 are a big gamble and are a big game changer for SciPark and its share price. It experienced strong growth in 2016 of 35%, and this is expected to continue into 2017. A weighted analysis shows returns of 30% in 2017.
In conclusion, our outlook for SciPark is positive, particularly in these tough market conditions. Our fundamental analysis puts it in the same league as the premium utility companies, while our technical analysis shows it entering a new bullish phase of stock growth. Thus, SciPark is a recommended buy with the view to sell in the next few years.
Green for the win.